Now let's try to understand a situation where the contracts get modified. So there is a construction company, the company's name is Buildwell, and that company signs a contract to build an office building for a client for 10 million. So 10 million is the consideration price. Now the project will be completed in 2 years. And what is the performance obligation? The construction of building, that is a single continuous obligation, the building will be done. Now let's see two different situations. The first situation is like where the modification is qualified as a new contract. So if the changes are being done, will that be treated as a new contract or extension of the current contract only? So after 6 months, the client come to the Buildwell construction company and he says that okay, I need additional separate parking garage next to the building. Near around building they need additional separate garage parking. So what happened, the price for the garage is $2 million, which equals to the standalone selling price, which simply means that even if someone go and reach out to this Buildwell construction, they charge $2 million for building this garage. So basically there is no effective discounts or benefits given to the customer due to getting a new work of creating separate parking garage. So this is the standalone price and there is no additional benefit due to this. So what will happen? Then we can say that the parking garage is a distinct contract. Why? Because there is no separate benefit and these two are highly independent, no much dependency on each other. The price is the, I can say, standalone selling price. Then we can say this is a separate contract and the new contract is for $2 million. This is situation 1 where the modification is qualified as a new contract. Now let's see the situation 2 where the modification is accounted as a part of existing contract. So if any modification is happening, we will say no, this is not a new contract, this is the existing contract. So instead, let's suppose the client come and request that an extra floor to be added to the same office building. Now the same office building is there and builder was creating or building that building, an additional floor needs to be made there. Now what happens, although if a new additional floor would have been created, the builder generally charged $2 million. However, now he says that okay, I am ready to give it for $1.5 million. Why? Because this $1.5 million is like a discounted price or new negotiated price. Then in this case, what we are trying to say, this is not standalone, this is not independent, this is heavily dependent upon the existing contract. So we will say that extra floor is not a distinct item, this is not a new item, because this is heavily dependent upon the current contract and it integrates into the original office building design, and the design will be same within the same architecture, this needs to be incorporated. And the price does not reflect SSP, which means that the price here is not standalone selling price, the standalone selling price was $2 million. So what we will say? We will say this modification of the contract, we will be saying that this is the modification of existing contract and will be treating it along with the original contract here, and they will do what? The builder will adjust the revenue recognition on cumulative catch-up basis. That is a different concept because the project is one continuous performance obligation. So now this concept which is written in the textbook is like this. So textbook simply says that the contract modification can be done, or contract modification can be done, or I can say is a change in the price, scope, or both, that is approved by all the parties. So the prices is changing, or I can say scope is changing. When a modification occurs, it is accounted for in one of the ways. If the modification is happening, we treat it as a new contract when we can say this is a separate contract or a new contract when we can say it, we can say the scope increases due to the addition of distinct goods and services. Now, in the case of above, where we see that a new parking was created, so distinct goods and services were created there, scope has been increased, and secondly the price increases reflect the standalone selling price. Then in the above case we also saw that the price which was charged for the contract of parking was $2 million, which would have been charged to other people as well. So this was the standalone selling price, just like an independent selling to any other person. So in that case, if these features are existing, we can say that this is a new contract, entirely new contract, and if the contract is new, then separately treatment is being done.